Well, the chart master isn't too surprised by today's bank action. He sees more downside ahead. Cornerstone Macro's Carter Worth is here to break it all down. So, Carter, what do you see?
Well, you guys sure covered it, and well, talking about levels and the reasons why. Let's look at three ETFs, all financial, and they're highly correlated, and yet their constituents are so different, it begs the question, why are they all behaving the same? So here is the big one, XLF, first chart, and Grasso and others spoke of, we're back to a former high. It's not about whether it goes higher, it's the principle of when you first get back to a well-defined peak, what typically happens, whether it's a semi-stock, gold, or a bank ETF. And what typically happens is you back away rather than breaking out. And there's a reason for that, because the people who lost money from December have had their money returned to them. So it's what overhead supply is. You've returned to a difficult level. Second chart, also XLF. Now again, this is 66 stocks, but Berkshire and JP Morgan are 25% weight. I've drawn the lines a different way to try to annotate or highlight the overhead supply, and it's not random that it is stopped to the penny at that level. Third chart, it's also the XLF, the big one, the sector, all financials, from insurance to banks to regionals, property, casualty, and it is a double top, and this is where you back away. Now, is backing and filling the same as backing away? Yes, because what are they both? They're not higher. So whether you do back away substantially, we backed away a bit today, or you back and fill, it's the principle that you've returned to a difficult level. Okay, two more. Now this is the KRE. The KRE is 130 stocks. It's regional banks. There is no JP Morgan, no Citi, no Wells Fargo, no Berkshire, and yet it's the exact same pattern. The biggest weighting here is 4%. The one we were just looking at, 25% in two stocks. And yet it's the same principle. You get to a former high. Before you can exceed a high, you typically will contend with it. Final chart. This is an ETF. It's the Invesco KBW index, and it's weighted to the five big names, 8% each. So Wells, 8%, Citi, 8%, JP Morgan, US Bancorp. It's the same chart. The point is it buy the rumor, sell the news? Was it all priced in and they're backing away? Sometimes it's just about a technical level, not about the price to book, not about interest rates. We return to a difficult level, and the banks found difficulty today.
All right, Carter, thank you. We will see you in a little bit for options action. In the meantime, let's trade Carter's take on the banks. Grasso, I'll go to you since you are our resident technical analyst here. What did you make of the charts here? And are there those specific individual names within the XLF or the KRE that you would still bet on?
Yeah, so everything that Carter said, I agree with 100%, other than the fact that I think we've backed away a couple of times. And if you extend that chart out on the XLF, and particularly, you can look back to '07. So then it not only makes it a double top, it could be a triple or quadruple top, and those don't exist in technical analysis. So when you look at these things, I think that people, as I said before, worried about the market backing off, worried about rates backing off, worried about the banks. But the truth is the yield curve is the most important thing for the banks. And let's not forget this, Melissa, the growth to value switch, rotation, whatever you want to call it. The banks are in the bullseye of that. So if that gains even more traction, which it will, if inflation starts to rise even more, we've seen the stimulus, there'll be more. Inflation will rise even more from now. These banks will move higher. Last point, JP Morgan is above the pre-COVID level. Now, the other banks are having some trouble getting there, but if there is one to bank on, pardon the pun, JP Morgan would be that one, and I think it's always a crowd favorite, crowd pleaser, and everyone, including our own Karen Feinerman, loves JP Morgan's Jamie Dimon.
You're saving that pun. I mean, you saved it for 12 minutes, but you finally got it out there, Grasso, and nobody laughed.
Shepard Smith here. Thanks for watching CNBC on YouTube.